You're welcome. Good afternoon to you.
Good afternoon.
All right, you're welcome.
Good afternoon.
Also, you can deliver your paper, and then you will also be part of the panel later.
Thank you very much. It's a great pleasure to be here. I regret that I'm not there in person. I also can't see the room, so I'm kind of speaking to myself, which is always very odd. I have a few slides. They're more extensive than they need to be because I know they'll be distributed afterwards, and so I hope that they will be useful, and I will project them now. It's very difficult always to come after lunch and also after the esteemed speakers that spoke beforehand, and I will do my very best to provide an overview. Specifically, what I'll be speaking about today is sustainability standards that are for capital markets, and specifically referencing the IFRS, which you know from accounting standards, and the global baseline and sustainability that it's developing, specifically regarding risks and opportunities. I'll walk through 6 different sections, and I'll end up with Nigeria specifically, starting first of all just with an overview as to why the ISSB was established. And it was established as a result of broad market support, large entities, including like the Financial Stability Board, but also G20, G7, and IOSCO, which has endorsed the standards. The objective is really to provide decision-useful comparable information, reduce the alphabet soup of voluntary initiatives, and enable an efficient reporting landscape for sustainability disclosures. Just in terms of the structure of how the ISSB operates, we operate under the IFRS Foundation. So the ISSB, which is the Sustainability Standards Board, sits alongside the International Accounting Board. And the objective is really to ensure that there are sustainability-related disclosures that sit alongside the financial statements. So that one of the key indicators, and I won't get into the technical details today, is that really in about 2 years' time, when you're picking up your financial statements, you're picking up at the same time your sustainability-related disclosures in tandem with the financial statements. The way that this works is really that your financial statements have a wraparound regarding sustainability-related financial disclosures, specifically risks and opportunities that are climate-related, but also overall sustainability-related. Interoperability is a very key feature so that the frameworks and the standards and the guidelines are used to so far work in tandem. Just to give you an overview of what first 2 standards are of IFRS. The first one is the general requirements for disclosure of sustainability-related requirements, and that really deals with material information that is sustainability-related risks, building on the TCFD architecture. So governance is very important, ownership by the board, strategy, and then of course risks and opportunities, and also targets and metrics. The second standard is the climate-related standard, which deals with material information on climate-related risks and opportunities, and specifically also looks at industry-specific disclosures. I'll show a few statistics later on to explain why this is so important. But very importantly, the standards are written so that really a company is looking at the strategy that it has, its transition planning, and re-evaluating its business model and operations, as well as its value chain, to ensure that the climate-related risks and the opportunities that they have on the company's performance and prospects are taken into cognizance. This is very important, especially for capital markets. So why the ISSB standards? First of all, because one of the reasons why, and we'll see that later, African companies and Nigerian companies in particular are sometimes rated down by rating agencies, especially those who take ESG risk into cognizance, is because there's not enough data and there's not enough internationally comparable data to support capital flows. And this is one of the key issues that the ISSB seeks to address, in cost-effective and decision-useful data for capital markets and investors in particular. So in that regard, because the IFRS Foundation's accounting standards are used in 140 different countries, the idea behind IOSCO's endorsement of these standards, which the Nigerian SEC is a member of, is that we create a global baseline that can be used across 130 IOSCO jurisdictions. If we look at climate data, for example, recently on the Global Climate Risk Index 2021, you can see that 10 of the countries most affected by extreme weather are in Africa. In fact, this figure has actually increased to 12. And so it's actually very important that even though Africa contributes the least to emissions, it's actually the most affected by these emissions. And there's also a secondary effect on supply chain and jobs. So one of the interesting statistics is that the African supply chain finance market rose by 40% between 2021 and 2022. The ISSP disclosures require Scope 3 emissions to be disclosed, which means that entities will start to look at their supply chains and their value chains as part of the evaluation of where the climate-related risks are. And this is something that's going to be increasingly material to investors and capital markets globally. So it's definitely something that we need to take into cognizance. The second graph here really just speaks to the fact that a lot of the jobs that we have, obviously largely in government and social services, but also industries, agriculture, retail, hospitality, transport and communication, you can see is also quite highly blended. What I thought was also very interesting is that what we sometimes forget is that remittances are actually the fastest growing flows into the continent. That's something to bear in mind because that's part of what can actually enhance our capital markets. But even in terms of foreign direct investment, we are expected to surpass Asia and the Latin American countries in the next 20 years, as the graphs here show. So there is significant financial inflow already, but that can be significantly enhanced. What this graph also speaks to is the fact that actually, whereas a country like the United States has 70% of institutional investors, other countries, and unfortunately Africa is under others in this OECD graph, we have 55% public sector investment and approximately 5% come from institutional investors. So in other words, there's a lot of scope for expanding and deepening our capital markets and attracting these capital flows from institutional investors, and data is going to be very critical in that regard. In terms of the criteria that they use, ESG integration is a big one. Negative screening, which is also where we get screened out a lot, is significant to take into cognizance. What I wanted to say here is that really data is absolutely important, and that's one of the things that the ISSB tries to highlight. Again, here we can see that where the lower ESG scores are, you can see that the market capitalization of those companies is significantly lower than the high ESG scored companies. Likewise, also return on equity and return on assets is significantly higher with the ESG scored companies. In other words, it's a business case for considering climate-related and sustainability-related risks. One of the big risks in terms of emerging markets challenges is robust data. Obviously there will be more, but also lower rankings and scores by rating agencies. This is what I wanted to highlight, which is part of what the sustainability-related disclosures address, specifically also because the IAASB, which is the global entity on assurance and audit, is looking at the ISSB standards, as well as, of course, the GRI standards, but ISSB is about a year old, and it's a major consideration for the International Accounting and Audit Standards Board. And this helps us address that question of high risk perception ranking by rating agencies, which is largely due to poor data and poor reporting. Likewise, what the ISSB standards are trying to address is really addressing the indirect and poor linkage presently between sustainability disclosures and capital flows. It's our conviction that actually that can be significantly addressed and therefore really unlock capital flows to the continent. Big question, will Africa leapfrog? Now, one of my favorite past jobs was actually working as the Director of Strategy and Monitoring at the Nigerian Communications Commission in the early 2000s. And we know how the telecommunications sector leapfrogged that regard. Likewise, also technology can be used as a major proponent to leapfrog also in the space of sustainability-related disclosures, and this started at COP27. Nigeria was the first country to raise its hand at COP27 to indicate that it will be implementing the sustainability standards in Nigeria. And the Financial Reporting Council of Nigeria and the SEC, who are on the panel, are the key drivers of that initiative on the Nigerian continent. And together with NGX, who's also on the panel, they have been among the larger voices to indicate that the standards require proportionality. That is, that they should be used also for smaller entities and especially applicable for African markets and emerging economies. So what's very important here is Nigeria already has leapfrogged in terms of leading, and followed by Nigeria were Ghana, Kenya, and Zimbabwe, who followed suit essentially and are among the first countries to adopt the ISSB standards. And this has broken a record and continues to be spoken about very highly. Likewise, also digital reporting, just talking about leveraging technology, also helps to provide access to data, which is critical for investors consume the sustainability-related financial information digitally, but regulators, in other words, to enhance the digital reporting and accessibility of information, and for preparers to reduce the cost and burden of reporting. Nigeria, Ghana, Kenya, and Zimbabwe, in fact, next week, will be participating in a Pan-African overview of the digital taxonomies, and also Nigeria specifically leading in terms of the roadmaps. Again, congratulations there to MTN, which is a member of the Adoption Readiness Working Group, and actually was the first to raise their hand during the launch in Nigeria of the ISSB standards to say that they will be early adopting these standards and leading the way for the African continent. Why are the standards so important, and what does it mean to have the accounting standards and the sustainability disclosure side by side? Because then climate-related risks and opportunities are built into the financial statements so that one can see future cash flows and prospects of, I'm just seeing that my battery is low, future cash flows in terms of, one second, apologies. Future cash flows regarding future cash flows and prospects of businesses that are related to sustainability-related disclosures. So this is an idea of how the tagging helps to make information much more accessible to ensure that investors can actually access the relevant information, not just with the financial statements, but also the sustainability-related disclosures. And in terms of shaping how this taxonomy looks, Africa contributed 14% of the comment letters, which is really a game changer, and has resulted in the main message being that we want to start simple on that taxonomy to make sure that especially those countries where digital reporting is not currently implemented have a good advantage of emerging ahead. And this significantly helps in terms of investors being able to access information, companies being able to cost-effectively report on disclosures, and also generally improving regulatory oversight. In the Nigerian context, what we've seen over the last 10 years is we started with the launch of the Nigerian Sustainable Banking Principles in 2012, but you'll see that from 2022 till now, FRCN announced first that Nigeria will adopt standards. The Adoption Readiness Working Group was created first in Nigeria with leading companies on the exchange, including MTN, Dangote, and others, included in a Readiness Working Group, essentially shaping the local environment. NGX and FRCN launched the standards in Lagos concurrently with 7 jurisdictions across the world. As a result, Nigeria is part of the Transition Implementation Group, MTN actually specifically, but also Dangote, in terms of shaping feedback to the ISSB on what is working and what is not working. Likewise, also Nigeria is included in the taxonomy consultative group that is working with IFRS Foundation in order to shape how the digital reporting landscape looks. This is an overview of the composition, and you can see that there are 2 strong African companies right on the table helping to shape these, and also various other kinds of feedback that can be taken. In terms of the 4 pillar strategies to support adoption, proportionality is absolutely key. That is making sure that the standards work for smaller companies as well as larger companies. Adoption guidance, transitional reliefs which can be decided upon locally, within the different jurisdictions, and of course additional capacity building, which is absolutely key. So it's a huge opportunity actually to build the capacity, leverage what the ISSB has and is making available in terms of capacity building, and work on the Ministry of Finance of Nigeria is actually one of the 30 plus global and local partners in the partnership framework, ensuring that the specific circumstances of emerging and developing economies and smaller companies are taken in cognizance. And my closing words, just because we said that this would be 10 minutes long, what I wanted to say was that, globally, the climate finance that is transmitted across the world, Africa only attracts about 3% of that global climate finance, even though it emits less than 4% of the world's global emissions. So that's a huge gap. It's a good and huge opportunity to actually take advantage of better disclosures and awareness in the financial statements to ensure that as a result of better data, more robust data, and better sustainability-related and climate-related disclosures, we're able to attract more climate finance and overall capital flows to unlock towards the economy and deepen institutional investment in the organizations and in our capital markets. And this is what the ISSB in particular has been designed to do. Sustainability-related financial disclosures for capital markets dedicated to investors to ensure that there is more specific information that helps to unlock those capital flows. I hope this provides a foundation for the discussion that will follow.